and consolidation yesterday. While we managed to latch on to that 21K mark, and the Sensex did manage a record high, that of 70,000. So we did clock in new highs, but we're consolidating at an index level. Although the good thing once again is, Nikunj, that the broader markets once again outperformed. Nifty Bank managed to hit that 47,500 level. PSU banks continue at record highs, and the Nifty, even in its consolidation, hasn't fallen at all. We're staying put.
So Aisha, let me put it this way. The pace of the big moves seems to have got arrested. But the positioning of the market, which is that traders and the commitment level which turned from bearish to bullish, the positional long calls, the short covering bout in the market, all that in a sense are not reversed, which is that in last two trading sessions we've not seen like a monster rally or a great fall of buying, but there is no selling. And the reason why there is no selling is because at these levels global investors are happy to own large cap stocks. Local investors are convinced that there is enough and more momentum in the market, and everyone in a sense is hoping that in the near term this market give you a final hurrah before its curtains down for 2023. Now, so let's establish that, and let's establish that with the Nifty, with the positioning, which is that the FI long, the retail long, and the DI long, and that in a sense is a clear indication of where the market is. Nifty futures at 80-point premium. There is no like real euphoria in the market. The FI long is at 57%. Retail is at 45%. Let's look at DIs also. Now, why am I bringing this point out, Aisha? Because before the state assembly election verdict, it was pretty much the reverse picture. So what has happened, Aisha, post the election picture, post the election verdict, is that the market has moved into strong hands. FIs versus retail, I would say FIs is the strong hand. And before the election verdict, retail had a long position which was higher than the FI long position. So while you may argue back and say that there is little follow buying between Thursday, Friday and Monday, that's okay. But the market positioning is such that the base building, I think, has started, and the fact that market positioning has moved into stronger hands, that gives you comfort in a sense that the market is not going to reverse or sell off anytime soon.
Okay, that's the overall setup, and yes, consolidation mode yesterday, but nonetheless, it was the broader markets that took charge. Just taking stock of what's happening across the globe then, and 6 consecutive weeks, by the way, of gains on Wall Street. So last evening, you did see gains of about 0.5% being notched up on Wall Street. You also had the S&P 500, which closed at its March 2022 high. This morning, the Asian markets as well are comfortably in the green, but the key talking point is, of course, going to be that FOMC meet and what is done there, but the eye on the CPI print as well ahead of the FOMC meet, and that is likely to fall to about 3.1% on a year-on-year basis, with core inflation, Nikunj, likely to remain steady at 4%.
Yeah, so it may not be the most awaited calendar event in terms of the FOMC meeting on Wednesday and CPI number today, because by and large global markets have reconciled to the fact that Fed is not going to cut rates, and they in a sense are unlikely to say anything different. And the FOMC minutes of the meeting versus today, what we will hear from FOMC later this week is going to be unusually different. It's going to be drastically different. So I don't think markets are expecting anything large there. One. Second, in terms of the CPI print, the directional cool-off, I think, has already started. And markets are not really worried about the CPI inflation data as a market-moving data. So from a data standpoint, even though you have CPI and Fed, I mean, it is as big as it gets, because one side is an indication of where the US economy is moving, and then that is immediately followed up meeting by Fed. But from a market standpoint, this is unlikely to be a event which will really set the ball rolling in either direction. So markets will acknowledge it, markets will examine it, but I doubt that anything market moving will come out. Pretty much like RBI policy, which came out last week, it has come and gone, and it has not really moved the market needle this way or that way.
Yeah, absolutely. That's the take coming in. But back home, the IPO market continues a buzz, and now it seems that Ola Electric is next in the fray, an auto company after 20 years.
Auto company after 20 years and the first pure play electric
EV,
company.
yeah.
So, everybody has an opinion about Ola. I'm not getting into whether it is good or bad, but everybody has an opinion about Ola. To be fair, Ola in a sense has really been the disruptor first in the mobility business and now in the EV business. But interestingly, Ola is going to be the first pure play EV company which will go public. But I think it will have a much more greater effect on the current companies which in a sense have a EV portfolio. So large part of the re-rating in TVS has already happened because they have a strong EV portfolio. Bajaj, they've already said that, look, we are very serious about running our business in terms of the EV commitment. Hero MotoCorp right at the behind of the curve. So I think first there could be excitement around Ola because it's a brand which everybody resonates with. Second, like Aisha said, it's the first auto company which is going public after 20 years because auto as a category does not go public. See the rub-off effect it actually will have in terms of the other companies which have a strong EV portfolio. So I think it will be an IPO which would be talked about, which would keep everyone guessing, everyone excited. And it really could be the talking point, I think, for next couple of days in terms of that safe comparison. Ola ka valuation itna hai, uska comparison kidhar hai, all that, connection, the cute connection making or matchmaking will automatically start. I think matchmaking is the right word, not connection.
Yep, indeed. SoftBank backed and looking at a valuation anywhere between about $7 to $8 billion by early 2024. So this is going to be a big one to track.